Hello and welcome to the Social Trading webinar. If you're watching the recorded version of this, it was held live on Tuesday, February the 14th at 7:30 in the evening. My name's David Jones and I'm doing this in conjunction with Ayondo Markets. I'll just leave the risk warning up. This is one of a series of webinars that I do with Ayondo. Every Wednesday we do the Market Outlook webinar at 12:30 on a Wednesday lunchtime, and that's a look ahead at what markets, where the opportunities might be in the days ahead, a look back at what's been happening and what's moving. This webinar is a little bit different. We do this one a couple of times a month, and it's really exploring the idea of social trading. With Ayondo, you can obviously do your own self-directed trading, which I'm sure plenty of us are used to doing, where you decide what to buy and sell off your own back. But also, what they're really known for is social trading, where you can copy other traders. So that's the point of this evening's webinar. So we're going to spend the next 20 minutes, half an hour or so, just looking at the idea of social trading, following some traders, and seeing how it all works. I think the risk warning has probably been up there for long enough now. So first of all, before we start, just a quick word from our sponsors. Just let me flip this screen over to here. Here we go. So Ayondo are running a social trading championship. So if you fancy yourself as a bit of a top trader, you can earn additional commission through people following you, and you can enter this social trading championship. There's a chance of winning up to $250,000, and to find out more, if you go to the website next-trading-star.com, all the details are there, and you can see how people are doing at the moment and really what you've got to beat. So that's Ayondo's trading competition. But let's just switch over now. What we're going to do, we're going to have a look on the Ayondo platform and take a look at some current top traders who are available to follow. So I'll just bring this up on the screen now. You should be able to see that. So what we're looking at here, if you go to the Ayondo website, I think you need to log in. I think you might need an account to do this. But you can go to the rankings list. The way social trading works, just to explain, it's pretty straightforward. Traders with Ayondo, if they want to, they can make their track records available to be viewed. And if you want to, you can follow them. So the way it works is if they do a trade on the DAX or Euro-Dollar on their account, then the same trade gets mimicked on your account as well. So if they do a trade where their stop loss means they risk losing 1% of their account on the trade, the same trade gets done on yours. And I think initially, if you've never done it before, and I hadn't done it up until about a year ago, it's a little bit of a strange thing to see all of these trades going through on your account and you're not actually involved. But actually, it does make, I think it does make sense. It's quite a complementary way of trading in addition to your own trading. You can set different levels of risk parameters. You can decide how much risk you want to take on. You can put a stop loss on your account, and we'll do all of this as we go through this evening. But what you're doing, in essence, you're trying to be the football manager rather than the star striker. So rather than trying to find all the trades yourself, you're looking at trying to put together a team of traders, have those trades mimicked on your account, and hopefully, crunch out regular profits, be it on a monthly or a quarterly basis, with a relatively low level of risk and level of volatility. But where it all starts from, for me, is this page here. So I'm doing this with an account. I've got a couple of accounts that I use to follow. This is an account I'm doing this with, I think, with about 400 quid in for the purposes of these seminars. And we'll scroll through and get a feel for how these traders have been performing. And we'll follow some, and you'll see really how easy it is to set it all up. I have to say, it's the league tables of who's been doing well have changed quite a bit in the last 2 or 3 months. I think, like a lot of traders, plenty of traders got wrong-footed by the results of the US election, the presidential election, and I think plenty of people were the wrong side of the market. So people who were, I think, good star performers have taken something of a hit in recent months, but it still gives us, I think, an interesting mix to pitch from. So what I've done here, I have sorted this by the last 3 months. Let's just flip it out and have a look at the last year. See, it's been performing well over a year. Here we go. So this person does crop up quite regularly, Hectorius. So this is someone who over the last 12 months has turned 105% return. So basically just about slightly more doubled the size of their trading account, which is clearly an impressive number. But this for me is the one to watch, the drawdown. You know, if we're looking at people who've got great performances, it's all well and good turning in a fantastic performance, but if along the way it means you're nearly blowing up your account due to the level of risk you're taking on, that's probably not a strategy that we want to follow. So for me, the drawdown figure, how much they end up giving back from the previous, that sort of profit peak in their account, is an important one. And with Hectorius, you know, it's not too bad. You know, he or she has just turned in 100% return with about 19% drawdown. You know, so it's only given back 20% along the way. So that's pretty good risk management there. If we scroll down and see this one here, Scotty 777, again doubled the account over the year, but look at the drawdown, massive. So at some point gave up 80% of profits, and you can see it in the shape of the P&L chart. So for me, this drawdown figure coupled with what their actual P&L looks like is a really important consideration. Let me just close this window down here. I've got too many windows open here. So let's, Hectorius here, 105% return, 19% drawdown. You can see a little bit flat over recent months. DAX Finance, 101% return, about 22% drawdown, not too bad. A little bit of a bumpy chart. OMP Trading, this was, when we've done other webinars, OMP Trading was a real star performer. But if I have a click on this person's profile, has really, again, sort of since the election, seems to have really hit the buffers, maybe trying to call a top in the markets and suffering quite a chunky drawdown since then, so giving up about 25% of profits. It's still clearly a cracking track record over the time the person's been trading, but a big chunk of profits given back. So again, almost doubled the account over the 12-month period, but gave back a chunk of profits in recent months. So there are various filters you can put in here, you know, to try and just refine your search. One of the big things that I always put in is RMT, and that's real money traders. So when I'm looking at traders potentially to follow, I'm not too interested in people who are trading on a demo account. And if these people want to, if they're trading on a demo account, they can make their track record available. But from my point of view, I take the view that, what if I'm going to follow you with my real money, I'd hope that you're trading with your real money too. So if we flip this off, you see there we go, we get a whole load of other traders now. So this one here, Kates, 234% return over the period, drawdown of almost 50%. So we see some cracking returns and some equally quite scary drawdown levels, but these people here all trading with not real money. So for me, I want to just see real money traders. So here we go. Let's have a look at the last 3 months, because like I say, I think the last 3 months have been a difficult time for lots of traders, being the wrong side of some of the moves we've seen in markets since the US election. And one who has caught my eye in recent days, this one down here, FX Professional. So number 4 over the last 3 months. P&L, the P&L to drawdown is maybe not the best, but let's have a look at the trend of their P&L in a second. So the R next to all these people's names, that means real money. Okay, so if you click on FX Professional, what I like here, what makes him or her slightly different to some of the other traders is this one trades quite a mix of different currencies. So there are plenty of traders on here who seem to focus on the DAX or the US indices like the Dow. This one's slightly different, trades a mix of currencies, and we'll come to that in a second. The one thing here to be wary of is that this person has only their track record only goes back to November. So we're only talking about 3 months of performance, and there are plenty of people on the platform who have 6, 10, 12 months plus performance. So I think we have to bear that in mind, that this person had a good 3 months, was pushed them to the top of the table over the last 3 months. But as I'm sure plenty of us know from our own experiences, 3 months, you'd much rather have a much longer track record to look at. But the trend is heading in the right direction. Clearly, that's their P&L trend since they've been trading. Claims to have experience of more than 10 years. Winning trades, 64%, perfectly sensible number. I'm always, again, a little bit suspicious when I see winning trades of sort of 80 to 90%. It can suggest that maybe the person doesn't like taking losses and hangs on hoping the market comes back, which will work some of the time, but isn't really a long-term strategy for success. So there's the P&L, the trend of the P&L heading in the right direction. This person, actually, unlike a lot of people, has written quite extensively about their background, and it's an interesting read. I think has written about Forex for a while, has been trading for a while, seems quite cynical about people who are aiming to get 20, 30, 40% returns, which is, I think, very sensible. And then down here we have a bit more information. You can see it breaks down the performance. So November, just over 3%, December, just over 2.5%, January, just under 6%, February, that is a cracking figure and one I would tend to discount. I think if you see the odd month of like this, a double-digit return, it's great, of course, if you're following the person, but I wouldn't put too much weight on that. I'm sort of happier just to see, if I see steady small returns every month, that's the sort of follower I'm looking for. But clearly, it's had a good month so far, and a good 3 months. Down here, you can see the asset allocation. So you can see the mix of markets this person trades. About a quarter of the trades done on cable, pound against the dollar, a bit on dollar yen, euro dollar, a bit on the DAX as well, euro sterling, euro yen, So clearly somebody who favors trading Forex markets. And then a bit more detail down here, you can see any trades they've got open. There we go. There's a bunch of open positions, all showing profit, all that lot. Okay, scroll down, and there's some of the closed trades. This one has had quite the run recently. Really has. I mean, there's only the one losing trade in there. That won't last, of course, but that has definitely, clearly contributed massively to this near 15% return in February. So, like I say, the one thing to be aware of here is the relatively short track record, only the last 3 months. But the P&L, the trend on the chart, is definitely a good one. So just to recap for me, it's very easy to come up with this league table of people to follow, but some of the filters, I'll just flip over to another screen and talk about some of the filters I'm looking for, if I can find it. Hang on a second. So some of the filters I'm looking for: real money traders, definitely. First of all, so if I'm going to follow them with my real money, hard-earned cash, I want them trading with their hard-earned cash. A smooth historical P&L. The P&L of their chart is an important one for me. I don't want somebody who's lost money for 10 months and then just risked everything and made money for the last couple of months. This healthy P&L to drawdown ratio. Ideally, the drawdown is less than half of their overall profit. That has been a lot harder to find in recent months as people have been wrong-footed by the sort of the Trump rallies we've seen in markets. Low volatility, again, a nice smooth P&L is what I'm looking for. I can get enough excitement from my own trading. I don't necessarily need it with people I'm following. And the detailed search lets you refine all of these. So let's flip back and start following this trader. So let me just flip over to screen. So like I say, I've got an account set up for these webinars. So let's just bring this up. So there's our trader, FX professional, real money trader. There's the P&L. And I think, okay, I'm going to give this person a go. I'm going to start following this person. So if I click on follow, in the best practices of Blue Peter, here's some I prepared earlier. So I've already got 4 other people I'm following. You can follow from 1 to 5 other traders in the account, and you can set up various levels of risk management, which are very important, and I'll come to those in a sec. So here's Actorius, Edel Metal, SiconNet, DAX Finance, and there's FX Professional. This is the one I just followed. And what it does down here, it gives me an idealized version of what my P&L would look like. So if I'd followed these over the last 12 months, I'd have grown my account by just under 75%. Wouldn't that be nice? Wouldn't it be wonderful to do TARDIS trading and go back 12 months ago and follow these people? Of course we can't, and I have to have the usual disclaimer that the past is no guarantee to the future, but I'm hoping that these consistently profitable traders historically will continue to be profitable. There's another degree of risk. There's the first degree of risk control I can set up. Let's click on FX Professional. Now, what you can do for all the traders you follow is set a level of risk mirroring in effect. So for example, let's say you were only following one trader and you had this button here set to 1 times. What that means is if that trader has a stop loss on the trade he does or she does, which means the risk to their account is 1%, then that trade will be done on your account at a risk of 1%. That's if you're following one person. If you want, you can halve that. So if they're risking 1%, losing 1%, you're risking half their size. Or you can magnify it out. If you are following one trader, I wouldn't recommend this, but you can magnify it out to 10 times. If they do a trade risking losing 1% of the account, the trade will be done on your account risking 10 times your account, but I wouldn't recommend that. How it changes, when you add multiple traders, the risk automatically gets dialed down anyway. So I've got 5 traders that I'm following here. And you'll see it says down here, if you follow several traders, then your risk is distributed evenly amongst all of the traders. With 5 traders in your portfolio, you would then follow every trader with a 5th. So let me just explain what that means. So I'm following 5 traders here. If FX Professional does a trade where this person is risking losing 1% of their account on the trade, then it's done on my account a 5th of the size. So my risk is 0.2%. So hopefully that makes sense. So if all 5 traders now did a trade risking losing 1%, I'd have a 0.2% risk there, 0.2%, 0.2%, 0.2%. Okay, so the more traders I follow, the risk gets dialed down. So with this one, I could say, well, actually, he or she has only got a 3-month track record. I'm going to knock that risk down even lower. Okay, so my effective risk factor there is 0.1 because I'm following 4 other traders. Okay, but so I can choose what I want to confirm settings. Let's say I've got a lot of faith in Hectorius. I'll click on settings there, and I'll say, right, I want to follow this one 7 times. Okay, so I'm going to dial my risk up. So if Hectorius does a trade where the person risks losing 1% of their account, on my account it's risk losing 1.4%, and I can set that to whatever level I want. Then maybe let's just stick it at 5 times. Okay, so my effective risk factor is going to be step for step with Hectorius. Confirm settings, and that's it. It's done. And if I adjust my risk, it does adjust my P&L chart, of course, because I would have followed this person larger size. So now I've got my 5 traders set up. The only thing left to do is click on execute on live account, and I think to set up an account with Ayondo, I think it's a minimum £1,000 to start following people. But then there's another level of risk control I'm going to come to in a second, so you don't need to risk losing that whole chunk of your account. So if we click on execute on live account, so there's another warning screen that comes up. These people I'm following, clearly they're active traders, they've got trades open, and it says, do you want to have the same open positions they do? And I never choose to have the trades opened, because if Hectorius bought the DAX 2 days ago when it was 50 points lower than it is now, the trade will get done on my account, but it will get done at the prevailing price. It doesn't go back and do the trade 50 points lower. So I've got no interest in mirroring their open trades. Excuse me. I just want to follow any future trades that they do. So I click on execute portfolio. Here we go. We're up and running. So there's my account balance, 431 quid. I've got no open positions, of course, because I've just started following these traders. But then what I can do, because clearly now if someone does a trade, it will be mimicked on my account, but I can set up another level of risk control. So if I click on here, your loss protection. So what this is like having a stop loss on my account. So I've got just over £430 in this account, but I can say, right, if the account balance drops to, for example, £250, close out all the trades and stop doing new trades. So in effect, you can control the risk on the size of trades of people you're following, but you can also have this ultimate risk control on your account, where if your account balance falls to X, so if you've got £1,000 account, you might set it up, I don't know, £750, £500, whatever, and say if my account balance falls to that level, then please close out all the trades and stop doing new trades. And that's it. Click on save, and it's done. So now, if I go back to Portfolio Builder, as soon as one of these people does a trade, it will be mimicked on my account in the size I've specified. SciConNet is an interesting one. This is the only non-real money trader I'm following, and this person had a good run. Again, has come a little bit off the boil, but up until the US election again, was up about 90%. But doesn't trade with real money, which is an odd one. But a great return, but again has come somewhat off the boil. Drawdown about 20% recently. Performance in start 74% return, but doesn't trade with real money. But I've put that in, and there you can see the performance, and there's the December performance really affecting their longer term performance, but still made 62%. In 2016, and you can see this one's track record, even though it's paper money, not real money, goes back to August 2015. So that is one of the longer track records out there. I just thought I'd highlight that one because that is a non-real money trader that I followed on an old webinar we did. But that's it. So those are the people I'm following. Let me go to my account. It's very easy once you set this up. I only check it a couple of times a week, but just to log on and see how things are going, see what open positions I've got, and then maybe every month I review traders' performance. But I won't necessarily kick them out after one bad month, because we've viewed track records over a slightly longer time than that. So I want to try and give them at least, a bit of a chance, not just get rid of them just on the 1 month. But it's a really, I think, if you're trading yourself, I think it's a really complementary way of gaining maybe some exposure, some extra exposure to markets, but hopefully trying to smooth out the overall profit and loss and the overall maybe, day-to-day, week-to-week volatility. If you haven't traded yourself before, and maybe you feel, well, I don't really have the time to sit there watching the euro and gold and the DAX and the Dow, I think it's a way of getting exposure to sort of day-to-day market volatility without having to spend huge amounts of time watching the market yourself and setting it up at a level of risk that you're comfortable. Because I'm sure we all know, most traders lose. If 10 people started trading today and they'd never traded before, in a year's time, we'd probably be lucky if 30% of them were profitable. So I think for those who maybe want to have some exposure to financial markets, this idea of sort of social copy trading, I think, is an interesting way of doing it. And that's really it. It's as straightforward as that. Once you open an account and register with Ayondo, you can set up a demo account. So you can actually, because that's how I started doing it. I started doing it in probably this time last year, March last year, and started off with a demo for a month, just to play around and get a feel for how this works. And I made 15% in a month, but with massive levels of volatility. The account, I followed some quite aggressive traders, but the account was really swinging around. So whilst 15% sounds great, it's no good if you're biting your nails down to the end of your fingertips because the day-to-day swings in the account. So I follow traders now with a lower level of risk and a better mix of traders. But once you open an account, you do have a demo account to play around with for 3 weeks to see how you get on. But I think it's a really interesting way of gaining maybe a little bit of exposure to markets in a slightly different way without actually doing it yourself. And I'd say, just go on the website and play around with it. It's just a quick reminder of the sort of filters I use. Number one does tend to be real money traders. I want to see that smooth historical P&L. I don't want massive swings or someone who risks everything 1 month to try and make a positive return. This drawdown number is an important one. It's no good at making, I don't know, 100% in a year if at one point you were down 90%, because the chances are when that trader starts losing money like that, you'll stop following that trader. You'll lose confidence in their approach. So I'm looking for like a relatively low drawdown, low volatility ideally, and there are a few other things you can put in to refine the search, but those are really the main things I look for. So that's it. We'll wrap things up there, but if you have any questions, I've written some stuff on my website. If you go to my website, tradeafter.com, have a look on that. And I've started writing a blog with another real account, which I started about a week ago, which I think I checked today is up about 80p profit so far, following just one trader. And I'm going to continue to add to that, sort of follow a new trader every few weeks or so. But if you go to my website, tradeafter.com, the blog on there details sort of my experiences with social trading. If you have any questions, I'll try and answer them if I can. Drop me an email, david@, tradeafter.com. And I'm reasonably active on Twitter, trying to tweet half useful stuff. And I'm on Twitter. If you're on Twitter, I'm @JonesTheMarkets on Twitter. But we'll wrap things up there. I hope you found it useful. I'll let you get back to your romantic Valentine's evening. So we'll finish things there. And we're doing the Market Outlook webinar tomorrow at 12:30 if you're around to attend that. But thanks for coming along this evening and enjoy the rest of your night.